Hello, welcome back to FTE Markets. Brazil and Mexico have been vying for the top spot in the Champions League of Latin American investment destinations. Brazil has been in the lead for several years now, but more recently Mexico has been challenging for the top spot. But will that last? Here to talk with me about that is Bartosz Pawlowski of BNP Paribas here in London. Bartosz, thanks very much for coming along. We can see from our first chart what has happened over the past 10 years or so. Brazil's currency, the real against the Mexican peso, has outperformed its rival by a good 50% or so. But more recently, that gap has narrowed. What's been going on there?
Well, I guess the investors, after this sort of outperformance, have begun to realize that the growth potential in Brazil has been coming off. The productivity or efficiency of the Brazilian workers has fallen because firstly they become more expensive, but also the wages have gone up, whereas the Mexico has been suffering from a bit of a slowdown in the US in the previous years, but now is beginning to look a little bit better if you look at the growth outlook.
Right, but one thing that's been happening is that Brazil surprised a lot of people by tightening earlier than a lot of other emerging markets, raising its interest rates. Mexico has kept them flat and falling. Why would investors prefer a loosening currency over a tightening one?
Well, first of all, Mexico is already finished with easing cycle, so they have responded to low inflation and low growth, and they made it pretty clear during the last meeting that that's it for now. Whereas Brazil is kind of also nearing an end the tightening cycle. I think it was a proper response to the currency, to the previous circumstances of the economy. And as we move into 2014, Mexico has created a better backdrop for improvement in growth, whereas Brazil's monetary policy is still choking the expansion. Actually, Brazil might slow down in 2014 further.
Right. Now, are investors still adjusting to that scenario, or do you think they're already positioned for it?
Well, I think they are adjusting a little bit, but the problem is that Mexico has been a darling of investors for the last 2 years at least. Right. It's a country with a very liquid market, relatively high yield, and with the proper kind of fundamentals in terms of also the outlook and the way the policy is conducted. So yes, there is some positioning and pretty significant in Mexico that has been built up over the last few years, but I just think there's room for more.
Okay, well, let's have a look at what may be coming up next. Our next chart shows the export markets for Mexico and Brazil. We've put in Colombia and Chile as well. We can see from that, no surprise, Mexico is enormously dependent on exports to the United States. Brazil, which exports less, is much less exposed to the US and a lot more to China and the EU, although also quite diversified. How will that play out?
Well, that's the thing. That's been the problem for Mexico in the previous years, that they exposed just to the United States, which slowed down after the 2008 considerably, and Brazil was taking advantage of this relatively higher diversification, not only China but also Europe. Seems now that first of all the growth outlook for Europe is not as stellar. Second of all, China is orchestrating a slowdown, and suddenly from all those big export markets, the only one that's really left is the US. But unfortunately, as you can see here, Brazil is not that exposed to that, whereas Mexico is.
Right, and we can see people have often compared as well, apart from Mexico and Brazil, Colombia and Chile. Chile was for ages the darling. Colombia has been coming up. Same story there?
Very similar story. Chile, with the reliance on copper exports to China, that is now not ending but slowing down considerably, whereas Colombia, first of all, is more exposed to the US again, but also offers higher yield and probably less positioning among investors. So the comparison between Chile and Colombia is to some extent similar to the comparison between Brazil and Mexico. Okay,
now we all know, or we've heard about the reform process in Mexico. Is that a risk for investors? Could that be derailed and throw this all into doubt again?
Well, sure. In every emerging market, reforms are a potential problem if they are not implemented properly. Some of the reforms have already been in place in Mexico. Investors are eagerly anticipating the big energy reform and how it plays out. Yeah. We've all heard the stories about foreigners being able to invest in drilling and developing oil fields. If that comes true, that is a significant inflow to Mexico. And I think the main thing is that the government of Mexico is actually trying to do something, which is in a little bit of a contrast to Brazil, which due to the political situation next year's election might have problems with implementing the necessary reforms.
Bartosz, great. Thanks very much indeed. So a reform to look forward to in Mexico, or to see what happens, less on the immediate horizon for Brazil. So let's see how the champions play it out over the next year or so.